Hey guys, what is going on? Welcome back to my Robinhood portfolio. As always, hope you guys had an awesome day trading today. You can see my portfolio up top had a very good day, up 2.15%, representing $671.91 gain for my particular portfolio today. A lot of that has to do with one stock on the bottom there, PTLA Portola, up 32.19%. Not going to go into detail about that. I actually put out a video earlier today while the market was active, while that was shooting up. So go check that video out for details. But overall, very good day with my portfolio. The three major indices today also were all up in the green today. S&P 500 up 0.13%, NASDAQ up 0.28%. The Dow 30 was up 15 points, 0.07%. As I scroll through my other stocks in my portfolio, you can see a lot of green. A lot of green throughout the portfolio. Consumer discretionary did take a little bit of a pullback, a little bit of a hit today in the middle, but for the most part, a very good day throughout my portfolio. And also on the bottom here, some of my energy stocks, XOM, CNP, SO, also in the red, but not by that much actually. And the green definitely outweighed the red today, excluding the PTLA Portola play. What I wanted to do today is talk a little bit about a topic that's come up, a number of different topics that are sort of related that have come up recently. So there are a lot of new investors viewing my videos, and they're asking, what kind of stocks can they get into with limited funds? So they want to jump into the market, they want to have some diversification, but they don't have a lot of money to necessarily, for example, like my portfolio, buy 60, 70 different stocks across all market sectors. Well, a good way of getting into the market, kind of playing around without, being too exposed, too at risk for any one market sector to pull back, is getting an ETF. So, up top here, I have 6 different ETFs that are all high dividend yielding ETFs: DTD, DVY, NOBL, SCHD, SDY, and VYM. If I pull up VYM here, you can see it's $76.39 stock, but it essentially is invested in 100 different companies, and these particular companies that you can see on the bottom there, kind of hidden by my watermark there, is essentially high dividend yielding stocks from U.S. companies, excluding real estate investment trusts, are weighted by market cap. So it's a passively managed fund, essentially selecting different high dividend yielding securities from high dividend paying U.S. companies. And there are ETFs for almost every market sector. So that is a great way of getting into high dividend yielding securities and then being diversified at the same time. The only drawback with ETFs is that they are charged a little bit of a fee when you invest in them, but it's not as high as a mutual fund. So an ETF is essentially a mutual fund without the high fees, but also without the active management. They're more passively managed. Here's another ETF here if you want to dive into the healthcare sector in particular, but don't have a lot of money to buy, 10 or 15 different companies. You can buy this particular ETF, $69.56, and with that you buy, you can see on the bottom there, healthcare stocks from within the S&P 500 index, weighted again by market cap. So you can buy a number of different companies and be diversified in that sector and only spend $69.56. And just to have a little fun, there's essentially ETF for almost everything. If I type in GDX, for example, you can see there's Market Vector's Gold Miners ETF. So invested in a lot of stocks in the gold mining industry. And you can see there's a number of different ETFs there. If I type in if I look for SCHH here, another good ETF. This is a little bit more in line with the S&P 500 overall. You can see up there SPDR, S&P 500 ETF Trust. So again, a nice ETF, a little bit more expensive than the others, $225.63. But again, you are buying on the bottom there below my logo. Market cap weighted index of U.S. large and mid-cap stocks selected by the S&P committee. So you're getting good stocks, diversification. You do get a little bit of a fee with that ETF, but also it's also managed passively. So you are essentially buying and selling stocks within that ETF, but not having to do that yourself, if that makes sense. The ETF is basically doing it for you. You're essentially invested in a fractional way in a lot of different companies, but don't have to spend thousands of dollars buying each of those individual company shares. And for fun as well, one more stock here, just to kind of show you guys, there's an ETF for almost everything. You can see here CATH. There's actually a fund for the Catholic Church here. So this is an ETF, again, invested in a number of different companies, tracking, as you can see on the bottom there, U.S. large cap stocks selected from the S&P 500. But you can see here, this particular ETF omits companies that are in certain industries at odds with the Catholic Church, with Catholic values. So, for example, this ETF won't have Anheuser-Busch in it. It may not have Philip Morris. Some of the sin stocks. So, a very, very good way of investing for new investors that want to be diversified but don't have a lot of money to buy necessarily 80 different individual stocks on Robinhood. I would suggest buying an ETF. So yeah, just kind of wanted to talk a little bit about how my portfolio did today, a little bit about how new investors can dive into the market with limited funds but also have good diversification, not be overexposed in any one market sector. So yeah, if you have any good ideas for new investors as well, let me know. Always interested in hearing others' opinions. Any good plays coming up, any good stocks you're investing, let me know. Any big plays for the end of the year, let me know as well. Always, again, always wanting to know what I should be doing with my portfolio. I'm a new investor, I love learning, and if you guys have any insights, let me know. So with that, I'll kind of end the video here. As always, if you enjoy my videos, feel free to like, share, and subscribe if you're so inclined. And until tomorrow, we'll see you then.